Hello everyone, George DeSantis here with the look of the market for the weekend in October 23rd, 2015. I hope you had a good week. I had a good week myself. Let's take a look at some of the charts. The market performed well last week again. So let's begin by looking at the monthly chart of the S&P. Okay, so we are looking at the monthly chart of the S&P 500. This week, we saw a further increase in the price of the market. In other words, S&P went up in value, in price, closed near the top of the bar, which is pretty bullish. Okay, when the market is closing at the very top, the high of the month, let's say. We haven't really hit the parabolic yet on the monthly chart. We did on the weekly, as we'll see, but it looks like if we are fast approaching it. And when we do, it will signal a reversal of the trend on the monthly chart, should we get there. Now, MACD in the middle pane continues to trend up. The histogram is shorter here than here. And that is confirming the uptrend. At the bottom of the chart, we see elder force. We noticed that it had crossed above the zero line here last weekend. And then this past week, it continued to trend up some more. So the monthly chart is beginning to look very much like a turnaround, okay, as we've seen on the daily and the weekly chart. Let's take a look at the weekly chart. All right, so on the weekly chart, it's important to know that since the Kalman filter crossed below the instantaneous trend line in June, actually late June, okay, it hasn't been above the instantaneous trend line until this past week, okay? So now we have a very bullish candlestick here on the weekly chart. The parabolic yellow dot has been hit, although you cannot see it, but it's in the middle of this bar, okay? So we have a reversal of the trend on both the parabolic and the crossing of the instantaneous trend line by the Kalman filter. On the next pane, we see RSI 12, I'm sorry. Last week, we noted that it had just about crossed the 50% line. And this week, of course, it continued to trend higher, confirming this nice uptrend that we're looking at in the market. Below here, we have the MACD. MACD has recently turned positive. It's now at plus 2.65. So it's positive. It's in what we call bullish territory once more. Okay. And so since this MACD has been trending up here, this is the first time we crossed the zero line. At the bottom of the chart, percent R, which I use as a momentum indicator, is indicating that, first of all, it crossed above the 50% line. It did so a couple of weeks ago. It continues to trend up. I mentioned last week that if it crosses above the 80% line and it stays there as it did over here, we will find that that momentum is really strong and this bullish trend should continue. So on the monthly chart, we have what looks like a turnaround with a very bullish bar so far for the month. On this weekly chart, we're seeing that the trend is continuing to be up, okay, and confirmed by a number of indicators. Let's look at the daily chart of the S&P. Okay, so we're looking at the daily chart of the S&P 500. Since the double bottom that we've been seeing for a while, the instantaneous trend line crossed above the Kalman filter crossed above the instantaneous trend line. We are now trending up here. We had a really nice gap up on Friday, okay, and so this trend is continuing. Last week I mentioned that we are likely to get to about 2074 because here's the target we set some time ago when we drew this triangle here, ABCD triangle, and that target was 2075. Well, guess what? We just closed at 2075.15. So we hit that target. Okay. I also put Fibonacci extensions on this chart. So from this high, from this high to this low, I've put the Fibonacci extensions. So from here, from this low to this high, this would be the 100% line. In other words, we've gained back the 100% of what we lost from here. Okay. Now the market has hit the 1.272 Fibonacci extension. The next target would be 1.618, which would be 2117. So if we can do that, we are really getting very close to the all-time high of the S&P, okay, which is somewhere around 2133, I believe it was. So we look forward to another good week, hopefully. We can see that Jerry Appel's sum of the rate of change indicator is continuing to maintain its position above the 4% line, which is bullish. Usually this is a buy signal here when it crosses above 4%, especially on the NASDAQ, but this is the S&P. Now we noticed last week we went over the divergence of MACD from price. Since then we have MACD in bullish territory. It is quite normal for MACD histogram to pull back a bit. Doesn't mean that the trend is finished, it's over with. And at the bottom of the chart, percent R, the momentum indicator, we can see clearly that since the momentum changed here to a very high momentum, very strong momentum, is continuing to maintain that above the 80% line. So we have a very bullish looking chart on the daily chart. Certainly there will come a time when we're going to bump up against resistance here, and we'll have to make some decisions about the positions we hold. We'll talk about that later, of course. Let's take a look at the weekly chart with the NASDAQ. All right, so we're looking at the weekly chart of the NASDAQ composite. And first thing we notice is that the instantaneous trend line crossed above the Kalman filter crossed above the instantaneous trend line. The yellow line is the Kalman filter. The blue line is the instantaneous trend line, or the ITL. I abbreviated to that. This here. We also note that as we saw with the S&P, this bar has hit the parabolic. You can see the parabolic more clearly on this chart. The yellow dot is within the body of the candlestick here. So that is signaling a reversal of this trend down. And as we saw last week when we noted that the Kalman filter trended up, that was pretty bullish. And we saw this continuation here this past week. So that's all very well and good for the bulls. At the lower panel here, RSI 12, my dyslexia is showing, right? RSI 12 crossed above the 50% line, and that also confirms the bullishness of this chart. Okay, we can see that once that RSI 12 remains above the 50% line, the market is usually trending up. Okay, now at the bottom of the chart we have MACD histogram is now just -5. So it hasn't quite gone into bullish territory yet, but it certainly looks as though we're headed there. Okay, so on the weekly chart of the NASDAQ, we have some confirmation of an uptrend again, just as we did on the weekly chart of the S&P. And let's look at the daily chart of the NASDAQ. Okay guys, now we're looking at the daily chart of the NASDAQ composite. We saw this one last week. On this chart, I pointed out that the Kalman filter crossed above the instantaneous trend line here, and we continue to have a nice uptrend. I also mentioned to you that we had a narrowing or squeezing, if you wish, of the Bollinger Bands. And I mentioned to you that once that squeeze occurs, we often get an explosive move up. And this is what we had. We had a nice explosive move up. Of course, that is attributed to the great performance of Google and Amazon and Microsoft. They drove this thing up. So now we have a nice uptrend continuing here, and we see that the price is now climbing the Bollinger Band. Okay, so we're getting a nice move here on the daily chart of the NASDAQ as well. NASDAQ Composite. On the MACD, we have MACD continuing to trend up. Of course, that's bullish. And at the bottom of the chart, Jerry Appel's sum of the rate of change issued a buy signal here. And of course, it's still on a buy signal because it will change when it crosses again below the zero line. But right now, we want to be owning the NASDAQ according to Jerry Appel's sum of the rate of change indicator. All right. So in summary, the monthly chart looks as though it is certainly turning around. We have a green bar, if you recall. On the weekly chart of the S&P, we have a very bullish chart. We have an uptrend, a nice uptrend. On the daily chart as well of the S&P, likewise on the NASDAQ Composite. So what's there not to like about this market? Yes, there are those who are doom and gloom and say that we're heading for a bear market, but it's nowhere in sight right now as far as I could tell. And of course, don't take my word for it. Look at the charts and trade what you see. Have a great week, and we'll talk to you again next time.